But you've actually made the point also that if businesses and consumers start taking out debt again, that this could be like adding, quote, rocket fuel to this economy. Sort of in terms of a timeline, in terms of lags, what should people be thinking about in terms of what that looks like over time? If businesses and consumers do get pretty aggressive, because they haven't been. Again, the shock of 2008 and the experience that came with has made people, I think, more risk averse in taking out debt. But suppose that this changes. What could that mean?
Well, my guess is that we're just at the start of a reacceleration of borrowing. And part of typically in a late cycle environment, people have already borrowed a lot. If you look at businesses in the late 90s, if you look at households in 2006 and 7 and 8, they were already borrowing at, secularly high pace. And today, the exact opposite is true. They're basically borrowing, both households and businesses are borrowing in line with recessionary type levels. And so what you have is a pretty good economy. You have interest rates that are coming down, and you have low borrowing that's occurred, and you have reasons to borrow and invest. On the corporate side, the CapEx related to, let's say, technological innovation and onshoring, there's clearly a significant amount of CapEx that is projected to occur related to those activities. So far, most of that CapEx has been financed through cash flow. And, that can only go so far, and it may be attractive to take advantage of, the overall strength in the economic conditions to step on the gas in terms of that CapEx and invest even more to try and get ahead. And so there, I think there's really incentives for businesses to borrow, particularly as rates are coming down. And on the household side, to be frank, housing demand is the primary way in which households borrow. It has been extraordinarily depressed for years as a function of higher interest rates and higher prices. And the reality is that, families at some point need to buy houses. People need to buy houses. The current run rate of home sales is well below what sort of the natural rate of home sales is. People have kids, people, get married, people get divorced. Those are all the sort of standard activities. And there's only so long those things can exist before people need to start buying homes. And so odds are what will happen is the affordability problem can get solved through innovation in the structuring of the mortgages. My guess is the 5-1 ARM that no one, that has been left for dead for 15 years is going to be the hot mortgage product in the spring as, interest rates are coming down.
Yeah, that's for people that didn't catch that. Bob's talking about adjustable rate mortgages.